Meantime, folks, take a look at the FANG stocks this morning, all deep in the red. But could this actually be a buying opportunity? That's the question for tech investors and whether they're looking for that. James Cakmak is here, partner at Clockwise Capital. Gene Munster, Loup Ventures founder and managing partner. Good morning to both of you. Morning. Gene, are you buying this morning?
I'm buying the key tech names that I think will be playing in these undeniable truths when we exit this. And I think maybe, Andrew, just to take a step back, is the broader market, the question about the optimal time, I believe, has not seen a kind of a seismic shock wave, something like we saw in 2008, when this stress on the system caused some form of a breakage, whether it's an airline going under, financial institution. There probably is still another fear wave to go through the market. So the optimal time about when to buy is influenced by when that happens.
Crude's a pretty
ultimately
good,
is these lower.
Gene, crude's a pretty good crash right now. It's not an airline, but I think I'd say it's even more noteworthy. $29 crude.
Fair enough. We're close there. I don't want to pick that bottom, I guess, is my point. But I do believe that ultimately when we exit this on the other side, there are undeniable truths. What's the new undeniable truth? Is that wellness, healthcare is going to be a bigger concern. I think that investors need to really embrace that. If you look at the tech companies that are really pioneering that, I still think Apple, in terms of what they're doing in wearables, 8% of iPhone owners own a watch. Right now, it really doesn't do much, a lot around the heart, but Apple's doing an intense amount of research about things like your inner ear. If we flash back to our seventh grade biology class, the skin in your inner ear is thinner. Stick with me for a second. Because of that, there are new biometrics that can be picked up. I think it's those type of companies that are really allowing us to have a better sense of our health care.
James, how are you thinking about it this morning?
Yeah, I think we're at a moment of peak uncertainty right now. I mean, with the VIX pushing at levels that we haven't seen since the 2008-2009 systemic financial crisis, I think it's going to get better from here because we are at a peak level.
You're calling a bottom here?
I'm not calling it. I don't want to go on the record and say absolute bottom, but I can tell you that the same thing happened in 08-09 where tech will continue to lead the way because whatever happens, tech will iterate, and that's independent of everything else. And we saw $4 trillion companies come out of the 08-09 crisis. So I think it'll be no different this time where you do have opportunities looking forward because the earnings picture is already ugly, the 10 years at below 1%, and the VIX has blown past where we were in the dot-com bubble. So I think that any news at this point, because that is peak uncertainty, will add an incremental level of confidence in the market.
What I can't figure out here is just sort of where we are and why we think these numbers are going to get so much better anytime quickly. That's my great concern. Gene, when you look at the tech company names in the short term, how do you see the dominoes falling in terms of? I'm actually curious, by the way, like even a Facebook in terms of advertising on Facebook. What do you think happens there?
Well, Facebook is going to be a windy road ahead. I've long been negative on Facebook, in part because of what it's done to our culture. But if I set aside some of my biases and think about their business, I think their advertising business is going to be impacted by some of the changes around tech and disclosures, privacy, things like that they talked about in their last call. But surprisingly, I think that Facebook is a beneficiary. Facebook is down 17% since February 19th. It's been one of the worst performers of the FANG stocks. But if you read between the lines, what Facebook is trying to do is to create these environments where people can feel close to one another but still being far apart. These avatars, this virtual reality, the augmented reality theme. And so I think that is one story that has been grossly misunderstood by the street is how Facebook wants to play in this. You look at what's happened with Zoom stock more recently. It's trading at 27 times next year's revenue. You look at a company like Facebook trading at 4 times revenue with some of the same kind of fundamental opportunity to give people the sense of community, but a safe distance apart. I think that those companies are going to be also beneficiaries. Pardon?
Do you think long-term the move on Zoom makes sense to you?
No, I don't. I think that I think Zoom should be should have moved higher. But again, at this time, 27 times revenue. Those are the ones that you're going to see. Slack, Zoom, you're going to see those kind of drift back lower. But again, you look at companies like Apple, 4 times revenue, massive player on wearables. You look at a company like Facebook, if I set aside my differences with the company, I think that they've got some big opportunity.
Okay, James, if you could buy one thing real quick, what would it be?
It would be Apple and Amazon at the top. I mean, just one thing I want to say is you have to look at the way we're investing is time savings companies. Companies that save consumers time and companies save enterprises time. That's going to come in the form of automation as it comes to machinery and productivity gains and also efficiencies on the consumer front. So Apple, Amazon at the top, and then I would point out companies like Zoom, Slack, and more fintech side on the other side of the barbell.
Okay.